Hello everyone, welcome to Mooney's Accounting Academy. In this video, I will explain you the principles of accounting, and some of the principles I explained in the last video. I will be sharing the link of the video in which I explained some principles of accounting, and the remaining principles today we will discuss. Periodic matching concept. It says that at regular intervals, the expenses of the firm must be compared with the incomes of the firm. Periodic matching. At regular intervals, these expenses and incomes must be matched. So what do you get if you match the expenses and incomes at regular intervals? Then you will come to know whether you are getting profit or loss. That is the objective of accounting. Calculation of profit is the objective of accounting. Okay, so for that purpose, this periodic matching concept helps, right? Next, revenue recognition concept. A very beautiful and wonderful concept. Okay, so many students asked me this revenue recognition concept so many times because they could not understand properly. So here let me explain in a very simple terms what is revenue recognition concept. So let me give an example. Suppose your firm has sold goods of 5 lakhs on February 20th, 2021. February 20th, 2021 on credit. Okay, this is a credit sale. So that means you don't get the amount on February 20th. And this person who purchased from you promised that he would pay the amount on May 15th, 2021. May 15, 2021, right? So now please closely observe the example. This transaction happened on 20th February 2021, whereas the amount you will get on May 2021, May 15th, right? So here what happened, transaction happened one day, but revenue, actually money you are generating on May 15th. So now the question comes, because you know that we follow the financial year and it ends on 31st March 2021. So that means 2020-21 financial year ends on 31st March. 2020-21 financial year is ending on 31st March. April 1st onwards, April 1st, new financial year begins. That is 21-22. Please try to follow this. 2021 ends on 31st March. From April 1st onwards, new financial year begins. Now, in this example, what happened? Transaction happened in 2021. February 20th. That means 2021. Whereas you are getting cash on May 15th. That happens in next financial year, 21-22. So the question here, to which financial year this 5 lakhs belong? To which financial year? This is revenue recognition concept. To which year this 5 lakhs belongs? So this question can be solved by having this revenue recognition concept. So according to this concept, what do we do? This 5 lakhs belong to 2021 financial year. Though actually you are getting cash in May 15th, 2021, but that 5 lakhs doesn't belong to that 21-22 financial year. That amount belongs to 2021 financial year because transaction happened in that year. So that's why naturally amount also belong to that year. This is what revenue recognition concept. In which year transaction happened, the revenue also belong to that year. Simple logic. Okay. Next, verifiable concept. This is also known as objectivity concept or evidence concept. Okay. So what is this? According to this concept, whatever the items you show in financial statements, suppose you show land, suppose you show some buildings, suppose you show computers, for all these items you must show some evidence. Verifiable object, evidence is to be provided by the firm. Suppose in your balance sheet, we will discuss in the next coming videos, all the organizations prepare balance sheet. Okay, so in that balance sheet, suppose you want to say, and you are depicting say 2 lakhs computers, and you have to show that where are the 2 lakh computers in your firm, from where you purchased it, where is the proof that you have purchased these 2 lakhs worth of computers, right? So if anyone asks, you must show the evidence, and you have to show these evidences to the chartered accountants also, then only they will sign, right? For all the items you are showing in your financial statements, some evidence is required, right? That is what we call it as verifiable object. Next, materiality concept. According to materiality concept, whatever the material worth in the transactions, material worth, then those transactions only to be recorded. Suppose it doesn't have that material worth in it, you can ignore it. Understand? So there are some transactions where there is some material worth involved in it, material value involved in it. Understand? So there are some other items where the material worth is very, very negligible, and those transactions, those items need not be recorded. So I will give an example. Suppose this pen, this marker, right? You will understand and you will come to know in the future next classes, every organization has to provide depreciation on the assets, right? For the organization, even a pen is also an asset, a marker is also an asset, an eraser is also an asset, right? And a costly plant and equipment is also an asset. Okay, but can we provide a depreciation on this? This is only 30 rupees item, and on this 30 rupees item can you provide depreciation? Is it worth to provide a depreciation and asking the accountants to sit on it to calculate depreciation? So where there are certain things which are not having that material worth in it, you ignore it, need not be taken into account. Okay, so that is what we call it as materiality concept. Material worth should be there. Understand? So insignificant items can be ignored, trivial items, meager items can be ignored, right? Need not be considered into account. Full disclosure concept. Full disclosure means complete information to be given to the accounting parties who are interested in the accounting information. Complete information. Don't hide anything. Full disclosure means you should not hide any information with you. That means you must disclose. What is the advantage of it? Why this principle is suggested? Very simple logic behind it. The people who always speak truth, the people believe them. The same logic is to be applied for the business organizations also. Don't hide anything. Reveal the actual facts. Then the people trust you, society trusts you. And if you are hiding something, if you are disclosing something, people don't trust your organization, right? So we should be like an open book, but at the same time, you are running a business organization, so you need not disclose certain confidential things. Society also doesn't ask it. But whatever the important information that is to be conveyed to the society, that must be conveyed. So there you should not hide anything. Okay, whatever the method of depreciation you are following, mention it. And what is the secret? Why to maintain secrecy in it? So you maintain it. And what is the profit margin on the products? You need not disclose it. That is your confidential matters. Profit margin, who will disclose? Okay. So society also knows it well. Which information is expected from the organization, which expected is not expected from the organization. Society knows it well, right? So there you can clearly demarcate the things. This is the information I supply. There don't hide anything, reveal, full disclosure, so that you will get trust from the society. Okay, people believe your organization and they think that okay, this organization is revealing complete facts. Next, accounting period concept. Okay, accounting period is considered as any 12 months period. Any 12 months period is normally considered as accounting period. Okay, but for the convenience of the business organizations, normally we are using our financial year as accounting period or accounting year, financial year. So what is that financial year? It begins on April 1st and ends on March 31st. So exactly 12 months, April 1st to 31st March. Okay, most of the business organizations follow this financial year as accounting year. Normally they follow it, but you can follow any 12 months period as your accounting period. But if you follow some accounting period which is not in accordance with financial year, then there may be some difficulties in calculation and adjustments. So that's why it is better to follow the financial year as your accounting year, so that the calculations become easy for us. Okay, so in these two videos I have covered all the principles of accounting in a very simple manner, and the students, you will understand it. It helps in solving some of the questions in your examinations. Okay, and if you like the video, subscribe my channel. Thank you.